Out. So welcome everyone to this call, live presentation for FinTalk. My name is Kojo. You can call me Blockchain Kojo. I'm not a financial advisor, but from the details and information shared, I think you'll be able to make your own financial decision and take that vehicle that's going to get you to your destination ASAP, right? So I'm going to stop sharing the video and go straight to the presentation, right? We're going to talk about FinTalk today. What is FinTalk? But just before we even get into that, we are here talking about cryptocurrency, but not a cryptocurrency, right? But just the blockchain in perspective. That's what most people call it, crypto, but we're talking about the blockchain, right? So FinTalk is a very, very simple to understand project. I call it a protocol. Why? Because it's not run by an individual. It is not run by a company. Your funds and all your deposits and your profits are not controlled by a single individual or centralized authority, but by yourself, right? So now let's go into what we are talking about. FinTalk is a P2P, person-to-person, blockchain financial platform. It's literally like your banking system that has been put in the power of your own hand. Just think about that. The financial system we are used to, the banks, what do? They allow people to come and deposit, AKA lend them money. Then they in turn now take those same funds and lend it out to their strategic partners, investors, right? People in different markets, they call it money markets, real estate, all these things, stocks, and they make a ton, right? And then they tell you, well, we're going to pay you 1% a year. Well, that's great, right? That's great. You can do that. But now we have FinTalk. They have taken this same system minus the fractional reserve lending, because on the blockchain, it is hard. I'm not talking about centralized systems. On the blockchain, it is hard to fractionalize lending, meaning that if you have 10 assets, you cannot give out 50 assets. You can literally give out the same 10 assets because it's on chain, right? So that's the beautiful part. What is the difference between a centralized system and a decentralized system? Because that's what we are dealing with here. Most of you know about projects where the minute you get on the website, right, and quote, you have to log in with an email, a phone number, a password. When you're making these withdrawals, it has to run through one of these protocols. So the minute one of these things is shut off, right, time and time again, right, say once bitten, twice shy, but hey, that's just the name of the game for some people. But once you understand that people are in control of your finances, you have to look at it differently, and you have to play it more aggressively, where you go in, get what you need really fast out of it, so you AKA play with house money. Now, what if I told you that you had the same ability here to now be the house, right? You can now be the house with FinTalk. So they're telling you that they brought their own technology. They're focused on borrowing, investing, financing, but they have their own technology called hybrid security technology, which presents a true zero risk investment, right? I'm not here as a financial advisor here telling you there's no risk. Even if there was no risk, I would still tell you this probably runs with one of the lowest risk I have seen in the entire crypto space as far as lending protocols. And you can compare it to an article. I'll try to put up that article on BINANCE that speaks about it, being ranked as part of these top lending protocols that's out on the blockchain today as we know it. This entire protocol also allows every investor to earn a piece of this company, a piece of this project, a piece of this ecosystem by being a shareholder holding their STO token, right? So if you're just coming on, in case you haven't muted, please just mute. But at the same time, just always just focus on the information, because it's going to get even much more tastier as we go in. They have everything on their website. You can come on. It's called fintoch.com, right? The next thing is this entire ecosystem of lending, borrowing, and investing is run by nodes, right? What is a node? So you can go online and look it up. A node, simply put, the way I like to put it, is a point on the blockchain. It's a digital or physical technology that runs and validates transactions, right? The blockchain is like an accounting book. Everything is arranged in a block and put on the chain, blockchain. So these nodes validate lending and borrowing on both ends because it's person to person, no human interaction. And they ensure that the entire protocol is running safe and smooth, right? So that is one great way, a security feature. And this is their hybrid technology that they've embedded. But the next thing is 100 nodes actually that run this entire ecosystem. Now, the next thing someone is going to say, well, that's great. But is there any way we can validate this? Show me a third party, right, that has come in and looked at this and said, you know what, everything checks out. A1 perico, right? I call it A1 perico. So we can go straight to certik, right? If you don't know who certik is, do yourself a favor, go online, just type their name in there. They are the biggest security auditing company in the entire crypto blockchain Web3 space. So you're talking about Deloitte, right? The level of Deloitte for these financial institutions, or what's the next big name, right? You guys know them. So this is the same level that certik holds. Even Goldman Sachs recently, less than a year ago, invested close to $100 million in certik for them to be able to use their technology to transition them from a Web2 company to a Web3. Ladies and gentlemen, Goldman Sachs is coming on the blockchain, just in case you don't know. Chase Bank is already on the blockchain. Their private investors are using a private blockchain that they have created to invest in stocks and equities on the market, right? You can look this information up. So it's not open to the public because, hey, maybe we don't fit a certain tax bracket. But today, I'm telling you, FinTocH has come and has brought it to the masses, right? So look at this audit. It tells you again what they do, financial services. But here's where it gets better, the security score, right? The security score to tell you the relative risk. They are at 90%. When I went on to certik and I was looking at other projects with a 90% score, I was seeing Polygon, right? I was seeing projects like Polygon. We all know how influential Polygon and Ethereum are to the new financial world. They are sitting on a 90 score, just like this project, which was also audited by certik. Can you imagine that? They are telling you again, this project is relatively decentralized. They are telling you right in your face that there is no person behind the window, behind the door, waiting for this money to just get so huge that he can say, you know what, it's time to pause these withdrawals. It's time to stop paying people because they've made so much. Now we just need to take all this money and sit on a jet and move to the next country, right? It's not going to happen here if you look at what they're saying in this audit. And the trust score places them in the top quartile. What's quartile? Top 25% amongst all projects in the entire blockchain industry. We're talking over 20,000, 25,000 projects in the blockchain space. And this is in the top 25%. Yeah, I definitely want in, right? So that's what we're here. We find all this information out here. The next beautiful part is running under a 247 security intelligence engine. Every minute of every day, there's a security intelligence engine running on these protocols, making sure that it stays the same. Can you say this of multiple projects out there? I think the answer is no, right? It can show you some paperwork, but then you can never even validate that. So what else? Where else can we find this talked about? Because this project was developed by Asians and marketed by an American arm of the company. But where else, right? Where else, Kojo? Where else can we find some information? Let's go on Binance. This article is not written by Binance. It's written by CoinCU, featured on Binance. Over 45,000 followers. They know what they are doing in the DeFi space, right? They are telling you that in 2022, the market was crazy. The market was defined by a lot of failure in numerous crypto projects. I think me and you can identify a ton of these out there today, right? Now, they're telling you that they have come up with their list, and this is dated in 2023, for the top 5 projects with the highest audit trust score currently. So this is coming for a leading expert in crypto, and they're telling you they have handpicked creme de la creme 5. Well, let's see what's in this list, right? Crypto Unity, oh, never heard of them, right? Calamaro Network, we don't know about them. We're not maybe into that space. But look, here's our baby, FinTocH. And they are speaking about this hybrid security technology, right? Which gives them multiple signatures, right? and zero knowledge proof. That's what the nodes are doing. The nodes are signing all these transactions that we are doing by lending. They sign it, bam, bam, stamp it. Okay, here you are, here you are. This goes here, this goes here. And it's all running on computer code. At the same time, they present a minimum risk or no risk because they stop the the borrowers from losing this money because it's locked via contracts. Can you imagine, right? So that's what makes them different. No one is running away with funds over here. They are literally protecting the ecosystem. And that's what I appreciate about this. So let's dive in right into this presentation. So just to dive into the presentation real quick, let's get some more information. So how does this work? What are we in for? The best question everyone asks is, how do we make money, right? I had a great call today. One of my friends, a top leader in this industry, and we got on a call with some huge leaders from a different project, and they were very straightforward. They came on the call. They said, "Look, I understand you're going to say a few things, but just let me know, how am I going to make money? How is the money being made? And what do I need to come in with?" And at the end of the day, he said he's looking to come in with 10,000 as his minimum because he knows what he's trying to do. So let's figure out how this is made, right? So we'll speak about Mr. William Thompson, right? He's the main player in this whole marketing structure of the project. He's been around multiple countries. So when you heard about the Hollywood Film Festival, this guy has been at all these events. They have multiple events lined up this month, next month, the month after. Throughout the entire year, they have events lined up in different countries, right? So that's what you're doing. So this is how this ecosystem works out, right? Very, very simple. This blue box you see represents the wallet. Ladies and gentlemen, in case I did not explain, there's no email and password to get started in this business. You have to download the FINTOCH Decentralized Wallet. What is a decentralized wallet? It's a wallet where you would have your own seed phrase, your own lock and key to get in and get out, to sign transactions that you authorize. No one can control your funds because you're the only one in control of this wallet. It's that simple. What's another example? Trust wallet. What's another example? Token pocket. What's another example? MetaMask. They are all in the same family, and FINTOCH has created their own that sets it apart from these other wallets. And that's how we are able to interact with this lending protocol and make this profit. So this blue box, you're the lender, the investor. The minute you make that deposit, a minimum of $100, right? You can get started with 100, 200, 1,000, 1,100. Why? It's in multiples of 100. So you can do 125, you can do 10,050, right? It's only in multiples of 100. So the minute you lend, and what are we lending here? USDT. We are not getting a coin, FINTOCH-ish coin, right? Where today the price is up, tomorrow is down the drain, right? So many of you that have been in DeFi, you've experienced that, right? The minute you hear a project and they tell you, well, come get our coin, right? Come get this coin, and they promise you it's going to do 10,000%. Well, that 10,000% is how high it could go, but it's the same when it comes to how low it can go, right? So you want to be very, very mindful of projects like that. Here, we're just staking that stable coin. It doesn't go up, it doesn't go down, and you get to earn 1% every single day on your deposit. Now, this lended funds go straight into the loan contract wallet, managed now by nodes, monitored and signed in by nodes, right? As you can see right here, 10 nodes per lending, per transaction, and this happens in real time. Now, on the other end, how are they making money to pay this 1%, right? So we have borrowers. That's just one level, right? One level to this ecosystem that they are able to generate a ton. So for example, a trader, a decentralized trader, people, we are not talking about Coinbase. We are not talking about Binance. We're not talking about Kraken or KuCoin where you can take the money in and out as you choose. No, this is a decentralized ecosystem. These people are trading. Let me just go right here on PancakeSwap, SunSwap, and Uniswap. We are literally lending directly to these protocols, these blockchain protocols run by computer code. Nobody owns or runs PancakeSwap. Nobody owns or runs SunSwap. Nobody owns or runs Uniswap. But guess what? Uniswap had a trading volume of over $134 billion in the last 30 days. The entire crypto market sits at 1 trillion. Uniswap alone had over 13% of the entire crypto market in just 30 days run through it. And it keeps doing this every day. I'm just letting you know, Coinbase, Binance are not the players when it comes to trading. That is not what happens in crypto. Beginners and maybe futures traders prefer centralized exchanges. But in the real world of crypto, all the money is moved in DeFi. The banks, the big institutions, they don't want no one controlling their money. They run it in DeFi, right? There's even a documentary of how they hired this top crypto expert who runs DeFi. He's been working with all the big banks to teach them how to move their money in and out of DeFi. Well, today, you don't need to be an expert. You just need to understand this protocol, and you can do exactly what they are doing and earn that 1% every day. So when a borrower decides to borrow 10,000, this ecosystem, this protocol, right, would require them to make a deposit of 50%. That's 5,000. Then this protocol keeps that in lock, now lends them 10K to go straight into the DeFi exchange. Everything happens right in their wallet. They can't withdraw the funds. They can only withdraw their profit and their deposit once their contract ends. 7-day contracts or a day contract, 2% a day for 7 days. That's 14% in charges and fees, right? Now, in DeFi, it's where the real gains are made. We're talking about 100%, a 10x, which is 1,000%. You guys have heard about it, 100x in crypto, but you've never seen it on Coinbase. You've never seen it on Binance because those trading pairs are such a high market cap. When you find a project that's just coming out, that's been around with a low market cap, they're on Uniswap, they're on PancakeSwap. So the majority of gains in crypto are made on decentralized exchanges. So these traders are making a ton, and we are able to benefit all these fees that they're being charged. So for someone that will borrow 10K, they would easily make 10K on the market and pay 1,400 in fees. Then the minute they make a withdrawal, they're charged 5% on their profit that they're withdrawing as well. Can you believe that? That's how this protocol is making money on just one end. You can easily see that they're going to be able to pay one investor who also lended 10,000 14 times and over with 1,400, right? That's how huge it is because you're only getting $100 a day. For example, for 10,000 if you lend. So 1,400 is paying you 14 days and over. And that's just one of the ways. We're going to dive into the next way. The next thing we spoke about, the smart contract that prevents the traders from losing, right? You can lose up to 30% of the capital because you have to allow for leverage, right? Well, not leverage, sorry for the wrong word. You have to allow for the gap. Maybe the token is going down before it goes up, but you can only lose 30%. But guess what? Remember, they deposited 50% first. Then they got 10,000. So if they lose 3,000, 7,000 is left. Now, the 50%, which the protocol added, goes back right to the protocol. Nobody that lends loses any money in this protocol. That's why it's called zero risk, hybrid technology, multi-signature contracts, right? So that's all that's going on here. Now, out of that 70%, they'll get to keep back their own 20%, which is their $2,000 out of their $5,000 that they invested. But guess what? Does it end there? Nope. They're going to pay fees. So if they borrowed for 7 days, they're still paying that 2% times 7, 14% on what they have left. Then they withdraw and pay that 5% fee. The house never loses. Who's the house? You, the investor. Me, the investor. We are the house. We are literally the house playing this game. For the first time, you can literally say you have been given the opportunity to be the house, not to wait on the man or the lady to tell you what's going on with your money, but you literally are the house. So that's why I'm excited about this. That's why I'm going to keep sharing this. And that's why I think we are one of the fastest growing teams so far in this community since we got in, right? Heavily marketed in Asia, over 15 million wallets today as we speak, that are part of this project. Now, we spoke about the partnerships for certik. They work with the likes of Sequoia, Binance, Coinbase, SoftBank, Yale University. So come on, they know what they're doing. Don't listen to me, listen to certik. What do I know, right? So the next thing we want to do is we just want to look at the interface. How does it look when you decide to lend, people? One thing I'll say is that if you're lending USDT in the TRC20 version, you are going to need Tron as gas fees, right? This wallet operates on 3 blockchains, Tron, Ethereum, and Binance. And for every single blockchain that you interact with, you pay gas fees. That's just how it works. If you use Trust Wallet or Token Pocket, there is no way you've ever sent crypto without paying for gas fees. So you're going to need gas. If you're running on the Binance network, if you're using USDT BEP20, you're going to need BNB for gas fees, right? If you're using USDT EC20, you're going to need Ethereum for gas fees. Now, they do have other options where you can lend BNB directly. You can lend Dogecoin directly, right? But I usually just tell everyone, you want to go with what's stable. BNB could be up today and down tomorrow, right? So you invest 10,000 today. Well, if it goes up 5%, good for you. It's a little bit extra on top of your capital that's earning, right? But if it goes down 20%, right, now you're looking at only 8,000 invested. You can't expect to get the same $100 a day. So you might want to stick with the stable coins. That's just my preference, right? But then to each their own. So this is how the borrowers interact. They put that margin in, and it's all through the same wallet. This is the interface, which you can see 7 days, and they go where? Pancake swap directly with that funds to trade. There's no place for you to play games. You literally have to go straight to the exchange once you decide to borrow as a borrower. And you look right here, also with the Tron chain, they go straight to SunSwap. If you look at the other chain on Ethereum, they go straight to Uniswap. So that's what's going on here, right? So we spoke about these gains. You can see everything in the wallet, people, whether they are making profits, whether they are staying stagnant. For every loan contract, there is a signature, there is proof, there is a contract wallet attached to it. You click on it. You can see it in your back office, what you want to call it that, or your wallet. You go to what we call swap historical returns. That's where they show everyone a couple of people because there's hundreds, thousands of them, right? They can't put all in their wallet. So everyone sees different trades that's ongoing. You just click on it. It takes you to the blockchain. Don't listen to me. You can try it out for yourself. You click on it. If it's a BEP20 token, it takes you to BSC scan. You see the minute they borrowed. You see how much they have made currently in profit, right? You can even see other contract that particular person has had in their borrow wallet. So that's how transparent this entire ecosystem is. Like we said, you can attach your wallet to other wallets. Why? Because FinToch wallet is decentralized and it works with metamask. It works with Token Pocket, meaning that I could have $1,000 in FinToch in my wallet. I can delete my wallet and just take my seed phrase, go to Token Pocket, import wallet, and I will see my funds sitting right there in Token Pocket like it was waiting for me. How many projects can you say the minute they shut their website, you could go to a different website and find your funds sitting there waiting for you to make that withdrawal? Okay. So what is the next way that they're able to make profit? So because of this large community they have crypto projects that are launching, that have already launched, that want people in this ecosystem to interact with them. They want us, the community, to be a part of it. So they provide liquidity to FinToch so they can have us trade. That's for those that are going to borrow, right? They can have them, or even just for us looking at it, we can be able to even buy crypto, other cryptos through the wallet. You can swap one crypto for the other because you know what? You're like, oh, maybe long. It might go long, right? So I just want to get a little bit. They have provided liquidity for us to be able to do all these things. And that is another way they generate income. A lot of us are in ROI projects and it's a linear project, meaning that if they say, right, quote unquote, they are trading your money, that's the only way they make money. So the minute they lose on a trade, they just lost everyone's money. But here they have other ways of getting liquidity to keep paying ROI. That's just one of the ways, right? And you can track some of these tokens. On PancakeSwap, CCDS is already sitting at 12 million in liquidity as of the time this picture was taken. So maybe a couple of months ago, this was January, maybe it might be more than that today, right? This other one sits at 3 point something million. So people, this is what we are talking about, DeFi. Now, the beautiful, exciting thing about this project, this is just the beginning. Like Boss Lady Sassy said, we are in early, people. They are launching their own blockchain in June. They had a hackathon in LA where they invited people to come and hack it. People could not hack it because it's safe, because it's trusted. And now they are ready to actually launch their own chain. So we don't have to pay gas fees to Binance or Tron or Ethereum no more, and they will all run on chain. So that's a very exciting thing. And it means that other things can be built on their blockchain. NFTs, for example, games. What would that do? Drive a ton of liquidity into their equity to keeping us liquid. The future is looking bright, people. They also receive an investment into their FTH coin. Now, FTH coin is a cryptocurrency that is not listed. It's called a security token, or it's called a equity token. At the same time, you can call it a fan token. So if some of you have heard about these soccer clubs that have their own cryptocurrencies, guess what? You can't even find them on any exchange. They are on socials. It's a trading platform for sports and entertainment where you can create a fan token and all your fans can bring in millions and billions. Some of these tokens over there sit on billions, which you would never find on an exchange, and they're all traded on socials. You can go online, you can type this, and you can find out about fan tokens or equity tokens. They have their own equity token. It represents the entire wealth of the ecosystem. And you, the investor, right? You, the investor today, you have a chance to earn some of it for free just because you're making money in this protocol. For every $100 you make, you get $1 worth of their share. I call it a share, right? You can call it just a stock share, for example. You earn $1 of their share. You are able to own a piece of this company because you are in profit. Where else can you find this, right? We've brought, some of us have built teams and projects. We're talking a lot of equity. And what do they do? Give us a bonus that we already worked for and a pat on the shoulder till they decided to leave. Here, you get to own a piece of the company as well. Powerful, right? So 18% was bought by a Middle Eastern family for $1 billion. Currently, this FTH equity sits at over 2.8 billion. How do I know this? Well, we all of us that are invested, we all know this. Why? It's in the wallet. You can track the equity. You can look at the contract. You can see the growth, the price. Currently, that's how huge it is, right? Now, 30% is valued for investors. 52% is running the entire protocol. So that's what we have here. We have something that's actually worth our time. They have a roadmap. It goes all the way to 2025, but they predicted to have 10 million users somewhere, in December. Can I tell you they beat that already? 15 million wallets already, right? So they are looking forward to, they've already moved the 2025 calendar to 2024, where they are going to launch and list their equity token as a STO on NASDAQ. So I'm sure many of you have heard that NASDAQ is also about to start listing cryptocurrencies as STOs, right? So they're already working on it, right? With the launch of their blockchain, this is going to be very possible, right? So they have a goal going into 2025. How many projects have a long-term roadmap? Well, here we have something that's long-term. So they have something that's transparent, that's DeFi, decentralized. So it's definitely not being regulated by an individual that needs to be regulated. So I think we have something great here. This is the end of the presentation. As an investor, this is all you probably need to know. But if you feel like you actually are open to another way to create passive income for yourself, right? I would suggest that you hang on just about 30 more seconds. I'm going to allow my co-host to come in, chime in, say one or two words, and allow people that are already a part of this to share the experience. I know Sandra, you're on here. I know Mr. Shanky, you're on here. If you just want to share a quick experience, the mic would be open. You can do that. let me pause the recording and then we'll get into the bonus plan, right? And then you decide to share this opportunity. There is a bonus plan that pays every single day, not every month, not a one-time bonus. I'm talking about an everyday bonus plan. So, Sassy, do you want to come in and say something? The floor is yours. Okay, so how do you get started with FinTocH, right? So you would request for a link or a wallet ID. If you get the link, it would bring you to a page like this where the wallet ID of your inviter is already in there. You hit create to create yours. Then at the bottom, you hit download to download the FinTocH app, right? For those in the US, this creation process requires a VPN just for that one time where you create and come back to create your wallet. So once you're done and you have your seed phrase in your wallet, you no longer need the VPN. So I just had to put that in there. Now, anyone outside the US, you already know you're good to go 100%. If you already had the app, you just take your inviter's wallet ID and you would paste it there yourself, then hit create to create your wallet ID. Then you would put it here, put in your own password, hit create. It would ask you to back up your seed phrase, right? You then write that down, keep that safe, never lose that, right? And then it will request you to input it the way that you have seen or tap on the screen in the way they've mixed match it to in the order in which you were giving your seed phrase. Then once you do that, boom, you come right here and then you would see the home page. Then you would come to wallet, you make a deposit, right? You can see the different cryptos here. USDT, TRC20. If you're gonna use that, you would wanna get TRX for the gas fees, right? If you use USDT ERC20, you would wanna get Ethereum for the gas fees, right? Because that runs on Ethereum. And if you use USDT BEP20, what would you do again? You would need to get Ethereum, sorry, you need to get BNB because that is for the gas fee. So that's how that works with this. The next thing you want to do is you want to go to lending. So if you wanted to lend, you would then now type the amount. Let's say you want to put 1,100, for example. It's a multiples of 100. You want to put 15,000, for example. Then you hit grab it now, right? That's after you made your deposit. If you're on the Binance chain, it says right there. If you want to go on the Tron chain because of your TRC20, it's right there. Ethereum chain because of your C20 is right there and you do the same. So that's the process, literally that simple. You make 1% a day. But here's the beautiful part. There's actually an incentive that allows you to earn your capital, your investment back in 63 days. Yes, I said it, in 63 days. I'm going to show a chart real quick that basically explains this. You get a incentive of 1.5% on your profit, just your profit, right? So I explain how that works. Oh, my wallet is not. Okay, yeah. So you see where it says my earning balance, $32. This profit that sits here every day as it sits, I'm earning 1.5% on just the profit. That's the incentive. As you leave it in the pool, it also goes to work. So you thought your capital was working alone? No, your profit also goes to work for you. And then it will earn you that extra income, allowing you to actually make ROI in 63 days, as opposed to 30% a month because of 1%. So people, this is what we have here, an opportunity where you can literally become risk-free in 63 days and play with house money, but you are already the house. Minimum withdrawals is $1. As little as $1 you can withdraw. There is no $50 withdrawal minimum, 500 withdrawal minimum. Wait for 1 hour for your withdrawal. The minute you click withdraw, instantly, because everything runs on the blockchain, people. That's how fast this is. So this just puts you into perspective. You introduce people, you see everything here, investment addresses, right? Everyone is known by their address, last four, last five, whatever. You get to see that, investors. So just to keep it short and simple, that's how this protocol works, people. Get excited, get started. The wallet is free, right? I have to pay for the wallet. And then from there, everything else, you're just running with it.